And we're seeing all of these central banks continue to copiously add gold and silver at these subsidized prices. We see another 36, 37 million ounces of silver delivered off of COMEX. Here again, we're just seeing massive deliveries. We're seeing deliveries coming out of SLV and out of GLD. And so it's one of these deals where I guess you have to take a step back and look at the whole picture. When the market corrects in precious metals, is it the end of the bull market, or is it the realization that this is just the very beginning?
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We have a returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals Investments, and he joins us for a weekly market update this Tuesday, July 6, 2021. Andy, thanks for coming back on.
Great to see you again, Dunnigan. Always great to be here. Thank you.
Last week, we hit you with a whole bunch of viewers' questions that have been submitted prior to our interview. This week, we're just going to go straight to the heart of your perspectives from inside the precious metals supply chain of what are the most noteworthy trends and developments that you see and what you see ahead in the marketplace as a weekly market report and in the broader environment around that.
Yeah, I did a lot of thinking over the last several days with a little bit of downtime preparing for a couple presentations. And I guess one of the things that just popped into my head regarding precious metals is, and just the greater picture around us is, what kind of a nation brags or boasts about a record high stock market at the same time that you see an unraveling of social order, where there's murders, hundreds of them over the July 4th holiday, where there's so much divisiveness right now in so many areas. And I wonder, are we focusing on the wrong things right now? And, all the talk of recovery and of things going back to normal. And, I look around me and this just doesn't seem very normal to me at all. And, on one hand, you look at, I was reading an article where General Mills is very concerned about inflation. That's from my old hometown in Minneapolis. And so I read the Star Tribune as often as I can to stay in touch with what's going on back in Minnesota. And they were saying that they wanted to address the inflationary environment through cost-saving measures, and they wanted to increase prices. And so on one hand, you see a massive company like General Mills saying, we're going to increase prices. We're concerned about a 7% cost increase on our what it costs to make our product. The underlying raw materials or the ingredients are going to go up by 7%, so they're going to do the exact same thing. Yet I look on the other hand and I wonder, is the bond market for real, or is that being manipulated as well? Because we see a bond market that a month or two ago hit 175 basis points, and now it's down to 140-ish. That's a 30 basis point move. That's a big deal. And what that basically says to me is that the bond market is pricing in for lower inflation. Bond market doesn't think this inflation is for real. On one hand, when you look at the inflation numbers, they are calculated year over year. So after everything collapsed in 2020, of course, the inflation numbers will look bigger this year. Maybe the way to do it is to measure it against 2019. But when I see a corporation like General Mills saying this, when I see the cost of everything that I buy at the grocery store massively higher, and when I see gasoline higher, and at least down here in Florida, the cost of insurance is higher, and so many things that I look at, with the exception of electronics, everything seems higher. So the question really becomes, is the bond market for real? Does the bond market, which is the biggest of all the markets out there, really, in comparison to like the equity market or the precious metals market, do they know what they're talking about? Or is this the Fed, once again, buying the back end of the market to make it seem as though these transitory inflationary statements are for real, that, within the next year or so, we'll see inflation die down. And I wonder if we can really take the information from the markets at face value, or do we have to trust our gut? And if indeed the bond market is for real, then again, and it is the market dictating bond prices, well, then it really doesn't matter what's happened with gold and silver lately, because what you're seeing the bond market tell you is that interest rates are going lower again, which ought to be really darn good for the price of precious metals. I guess what I'm getting at is that I think people need to realize this is not about short-term gains. It's about long-term. It's about for the end of the game. And I think that's the most important thing when we're looking at a market that can frustrate, a market that can defy expectations and be counterintuitive to what we think is going to happen and what we feel and what we see. It just seems to me like this is a very, very high stakes game. You got the U.S. doing all the jawboning, interest rates going lower, everything is peachy keen. And on the other hand, you have central banks from around the world continuing to massively accumulate metal. Russia just came out and said they're going to buy $4 billion worth this month. And we're seeing all of these central banks continue to copiously add gold and silver at these subsidized prices. We see another 36, 37 million ounces of silver delivered off of COMEX. I actually thought it would be much higher than that. It's shocking. With 2 days left in the contract, it was over 90 or 100 million ounces that were open interest. And I think on the first delivery day, 35, 36, 37 million, something to that extent. There can still be more throughout the delivery month here in July. But here again, we're just seeing massive deliveries. We're seeing deliveries coming out of SLV and out of GLD. And so it's one of these deals where I guess you have to take a step back and look at the whole picture. On one hand, is it inflation or is it deflation? Is it when the market corrects in precious metals, is it the end of the bull market, or is it the realization that this is just the very beginning? These are the things that you have to grapple with. But I guess if I could sum it all up, you buy precious metals not to get wealthy. Do not look at the short-term moves. Hope you never need to use it. Look at it as wealth. Be glad you have it, whether for an opportunity, not just an emergency, and if not, you give it to your kids or a charity. So, I mean, it was just a weekend of reflection for me, but I guess I don't believe the statistics. I don't believe half the information I see anymore, because it just doesn't, I don't feel right. Something is telling me that something isn't right in this industry and at large with this economy, because on one hand, you see the rhetoric saying things are getting better and interest rates are going to go lower and everything's fine. On the other hand, I see the biggest money in the world taking opposite actions quietly. So for me, I look at this, and I hope other people can too. And believe me when I say this is a subsidy. I cannot see how we have any way out of this without much, much higher metals. And if indeed interest rates continue to move lower, if for some reason they're able to hold it down and keep interest rates lower, well, that in and of itself is incredibly bullish for precious metals. So do not be saddened by what we saw. In fact, if you look on COMEX right now, it's quite interesting. You have a situation where the four largest commercial banks have pared down their short position to the lowest it's been in quite some time. I think it's been almost 2019 when we saw that. And the last time we saw this low of a short position by the big four commercial banks, we saw gold rally $220. And I think on COMEX, the setting or the backdrop, and maybe even fundamentally technical analysis-wise, for silver looks even better. So don't be disheartened by what we've seen over the last few weeks. look at it as an opportunity and realize that the biggest money in the world is trying really hard to keep you from understanding exactly what is happening. And that to me is what sticks out the most, that they're really trying hard to make us believe that all is okay. And when I see interest rates move lower, I wonder who in their right mind would be buying treasuries at this level, starting at 170 basis points, now down to 140 something, when by their own admission, this transitory inflation's at 5%. And we both know that's not true. And I keep thinking it's got to be the Fed. Who else is foolish enough to do that? I guess we'll see. But sometimes you just have to trust your gut and not your lying eyes, because your eyes will lie to you if the powers that be have anything to do with it.
Yeah. In my former career as an engineer, I came across a lot of statistics. We had to make data-based decisions and data-based analyses and that sort of thing. And the old saying was, figures don't lie, but liars figure.
Yeah,
so
that's great.
When we had John Williams from shadowstats.com on, he talked about a lot of the same misleading factors that you've been describing. And when you talk about people needing to trust their gut and changing the perspective of how they see metals, as seeing it as wealth and seeing it as something solid in ounces. 2 clients in the past week have sold significant properties. One was like a 300-acre ranch. One was a 5-acre, premier property. But both said they didn't want to put the proceeds in the bank. They didn't trust the stability of the integrity of the dollar to hold value, number one, and number two, the stability of the banking system and all of its various dependencies and risks. So they both wanted something real to save and to put their money in savings.
So if people really, maybe the powers that be sense that big money is not wanting to. I mean, look at the reverse repo market. That's a prime example. What is the reverse repo market? It's at all-time highs. I don't know the exact number. It's billions of dollars that are in the repo market. But the reverse repo market is the opposite of the problem we had in 2019, where there wasn't enough liquidity and the Fed had to inject liquidity into the market. Now there's too much liquidity. And instead of the banks, what the banks are doing is, instead of lending it to you or to me or to other people into the economy, which creates money, which is what money creation is all about, they would rather give it back to the Fed earning 5 basis points.
That's 0.05%.
Yeah, and that's with safety, because obviously there is no safer place to put it at this point than back with the Fed. They would rather earn next to nothing, in fact, go backwards when factored against inflation and money creation, than lend it out to you and to I at a massively higher rate. And what does that tell you? I mean, to me, it's all about lip service. When the banks are saying, forget it, I don't want to put it out there, that doesn't tell me that the economy is getting better. And I go back to my ultimate statement, my opening statement. What kind of a country boasts of a all-time high stock market with this type of divisiveness? And this type of social breakdown? And, people may disagree with me on the social breakdown part, but I think it is becoming kind of stark in its reality. So anyways, that's just my take on things. And I come back to the fact that gold and silver are wealth. And in periods of great uncertainty, where so much keeps happening so frequently, so different from anything that's ever happened before, you rely on your gold and silver as your wealth. And when you talk about, people forget, bail-ins were put into place in 2008. At the same time bail-ins were put into place, so were gating of money markets. People feel safe in the money market, right? Well, they put gating regulations in at the same time they did bail-ins, saying that you can't leave when things get real bad. Yeah,
I have to chime in on that one, because my wife and I, people have heard this story if you've listened to me for years, but if you haven't, you might not have heard it. And after the .com collapse and so on, my wife and I decided, look, we've been burnt a couple of times by this. We're putting all of our funds that were in stocks into a money market. It was a cash equivalent money market fund called the Reserve Fund, 2-day access to your funds, and it still gave you about 2% interest. We thought, okay, that's better than nothing. And that's what we did. And then with the Lehman Brothers collapse and so on in 2008, 2009, we got a communication from our brokerage saying, until further notice, you will not have access to your funds in your cash equivalent money market funds. We said, wait a minute, no. We parked it over there to get out of the way of harm. And they said, yeah, well, in the back end, it was invested in Lehman Brothers, and therefore it's been collaterally damaged, and therefore you're not going to have access to your money. And so we never did get it all back. And that's where we realized that being dependent on a brokerage and then on a fund within that, and then having no control, no visibility or control of what they're investing in on the backside. It's funny because when we interview Alistair McLeod, he always talks about the banks drawing in their horns. And that's just what you're saying, is that you're seeing evidence through this unwillingness of the banks to lend, that they would rather put their money back where they think it's going to be safer than lending it out into the economy. That's not the body language of them trusting that we're in a growth phase.
Yeah, Alistair is one of my top 2 or 3 all-time favorites in this industry. I may be saying something similar, certainly not as eloquent as and with that great accent the way that he does, but it's true. And what you said also makes me think it will happen the exact same way, where you'll wake up one day, people will wake up one day, and the rules have changed, just like that. And and I really do believe that. You can see how the big money is positioning and moving away from the dollar and doing things well in advance of it being obvious that there is a shift away from the dollar or a problem in the markets, where they'll be sitting on their deck chair watching it all unfold in front. I really, I say this stuff, then again, not to entice people to buy precious metals, but because sometimes I think you need to look at things through a different lens. I've had 31 years of ups and downs in this market. I understand what's happening, and I see what's happening in terms of its volatility. But I'll tell you, never in 31 years have I been more convinced of the importance of owning gold and silver. And if I didn't see the massive amount of accumulation from the central banks, the commercial banks, the sovereign wealth funds, the biggest, wealthiest, most influential money in the world, I may not feel as convinced as I do, but every time I feel this way and I look at the price, I see, another 37 million ounces delivered this month. So you have to understand that, like you said, I'll get it wrong, but give me that one again about liars lie and...
Figures don't lie, but liars figure.
There you go. Well, that's just it. The figures aren't lying. And so that's why we do what we do, and that's why I say what I say. Yeah, in a perfect world, we buy precious metals and we get wealthy from it. But that's not what it's about here. It's about retaining and preserving. And when that day comes, when we wake up to see the problems in the marketplace, you'll have, or your listeners will have, a life raft when other people are swimming in an ocean of uncertainty and trapped. And the fact that they gated money markets was because back then when that was happening, there was a run on the money markets for that same reason. People started freaking out and were trying to get their money back. And now you can't do that if things get real bad. And so these truisms that, people assume there's great liquidity and everything will be okay because they have been through most of our lives. If you're 60 years or younger, you've lived through just about nothing but prosperity for the most part, a few ups and downs and inflation or what have you. But in the end, everyone's done very well. But it just seems like that ride is starting to come to an end. And when you see the length to which the BRICS nations are going to de-dollarize and to prepare ultimately, I think, for a shift away from the dollar as the singular world reserve status, that's just my own opinion, it adds further conviction that you need to, when we talk about diversify, you need to have something outside the dollar, because everyone's diversification, if not in something like precious metals, comes back to one thing, and that is the dollar. And this is a way for you to sidestep all of that risk, like the hedge funds are doing, like the commercial banks are doing, like the central banks are doing. Do what they're doing, not what the rhetoric is saying. And I think in the end, you'll be all right. But even if it doesn't make you wealthy, even if it doesn't go to the moon, the worst thing you've done in this case is leave a legacy for your family that you can rest assured will be worth something when they inherit it somewhere long, long time from now. So just my little bit of opining from a weekend full of reflection, I guess.
It sounds like some of that aspect of what you're talking about there of looking at metals as a subsidy that the most powerful and influential forces, including central banks and so on, are accumulating, and yet it's at a time of subsidized prices currently. We'd like to help out our subscribers, our viewers, our listeners in that effort as well, so that the little guys don't get left behind, so we don't have a two-caste society. A lot of what we've been living through is this feeling that we're living in a two-tier society, and you're either on the ins or the outs, and a lot of us feeling like our normal lives of feeling we lived in a free life have now feel like, no, we live in a secondary class, and we're going to be deprived access to opportunities or whatever. So in the spirit of making sure that ordinary people have access to the same opportunities to accumulate at this low prices, what weekly specials do you have for us?
And by the way, I believe that about you. Sincerely, that you are honorable and honest about that. And I hope everyone does. And that's what's always attracted me to working with you, is that I believe that you are genuine in wanting to help people, and it resonates through you. You can see it. I can. So yeah, back to the special. So again, as I mentioned last week, I was heading out the day after we chatted, or the day we chatted, to help a client with a very large estate, and the client did a whole bunch of trading, inherited an awful lot of gold, and traded gold for silver. Didn't have much in the way of silver, and so we're going to continue with more of the same extra fine $10 and $20 Liberties that will be valued or priced at $129 per ounce over the price of gold. Half of that for the $10 Liberty. So $64.50 over of a half ounce of gold. I know I'm trying not to make that complicated. So the price of gold plus $129 for the $20 Liberty, half of that for the 10. But these are the best gold coins I think you can own. I really do. And yeah, if people want to buy uncirculated certified grades that are more collectible, we have those too. For most of my career, that's all I've ever owned. I want to say that I believe in the end it's about number of ounces. Your wealth and your peace of mind will be valued, I think, in the number of ounces that you own. I learned that from Richard Russell 25 years ago, a mentor of mine, and God rest his soul. He was an amazing man, and I read him every day, and he always would say it's about the number of ounces in the end. And I would add, without being penny wise and pound foolish, 1,000-ounce bar is never a good substitute for 1,000 one-ounce coins or even 10 100-ounce bars. Flexibility is important. When we talk about these particular coins, these are $20 and $10 gold pieces that were minted from 1850 to 1907, and they were legal tender for the U.S. prior to 1933, when gold was subsequently confiscated as the first act in office in April of 1933 by President Roosevelt. What's cool about these coins is that they're extra fine condition. Now, they're not uncirculated and certified, and like the silver coin behind your head that people can't see right now, but there is a silver coin back there that's uncirculated and certified in a PCGS holder or an NGC holder. And those are cool. We have those. And the reason there are a lot of those uncirculated coins, by the way, Dunnigan, is that just like the insiders know what's coming, prior to the gold confiscation in 33, an amazing number of coins were somehow mysteriously shipped across the Atlantic in steamships. The very wealthy got wind of it, and they sent their gold to the banks safely outside of the confiscatory arms of the government. The insider always wins. The big money, look what the big money is doing now. Doesn't matter what the price is doing. You can see what they're doing. They're accumulating ahead of the crowd, just like they sent their coins offshore ahead of the crowd. Now, these coins that we're selling aren't the uncirculated certified kind, but they are lovely nonetheless. They are circulated as if they were in someone's pocket. Now, that to me is cool. Close your eyes and hold a coin in your hand and think this was in someone's hand 130 years ago. It's kind of heavy if you think about it. I think it is. And true piece of Americana. In 2007, late 07, when Obama had pretty much been anointed as the new president, all the way through 2009, those coins with roughly $1,000 spot price would have been 40 to 50% over the price of gold all day long on bid. That's what I would have paid you for them. And so when we talk about premium potential, it doesn't have to be uncirculated or certified. the uncirculated coins would have been 60, 70, 80%, 62, 63, 64 grade and higher. But these circulated extra fine, roughly 40 or 45 grade, would be lovely. Just like a coin in your pocket, you can tell it's been worn, but it's not brand new, uncirculated, shiny. But nonetheless, you can see the date, you can see all the design, the lettering, the stars, everything. You would never not want to show someone this coin if indeed you wanted to show a loved one or what have you. So from a standpoint of being a piece of Americana, from a standpoint of pricing, they are substantially cheaper than the gold eagles right now and on par with all the other bullion coins. Yet for 98% of my career, they were always 15 to 20% more than a gold eagle and all the other bullion coins. So they're priced right. They're safe from confiscation. They offer better upside potential. There are no dealer reporting requirements, buy or sell. And they are a real piece of this country's history that seems to be maybe writing some of its final chapters in terms of its monetary and its role maybe as a singular world reserve status currency. I don't know. Just feels that way to me. So having some of these coins, I think, while they're here, because before we did this special over the last few weeks, only because I was taking part in this very large buyback from the same gentleman twice, I haven't seen them. I mean, they're available in dribs and drabs, not in 1,200, 1,600, 2,000 coins that we bought. That's a rarity. So if you're buying gold, this is my number one choice, bar none. And I think you'll see that they're priced as well as anywhere in the United States, maybe better. But I don't want to ignore the fact that I love silver and that ultimately silver is probably a better investment. But ultimately, I look at silver as a pathway to getting more gold. At a 68-to-1 ratio, you buy silver and you trade into gold when it gets to 34-to-1 and you double what you could otherwise buy today. So in theory, I think everyone should own some silver, but if you're going to buy a bunch, it's not a bad idea to think about that. Think about what the future brings and how maybe ultimately, because gold was classified tier 1 and all the banks are buying it, maybe that's really the place we want to be in the end. And for those of you owning silver, there's a long way to go in the gold to silver ratio. And when it gets 34-to-1, or maybe even closer to its natural ratio right now, single digits, 7-to-1. Geez, that would be a 10-fold increase, 9-fold increase right now in relation between gold and silver. So anyways, look, bottom line is this. I don't want to ignore silver either. So we have some really amazing silver bars. Stunning. And these are the coolest silver bars I've seen. They come in boxes of 50 bars. You do not need to buy 500 ounces. They are made by the Pamp Swiss Mint. They are the classiest, nicest looking 10-ounce bars I've ever seen. They come individually. They come with one of these little certificates. I don't know if you can see that. It says Pamp. It lists the bar number that will match the number on the bar. And again, they do come in boxes of 500, but you can buy one. They also come in little plastic bags. They're really neat. This is a kilo bar of silver. Pamp Swiss, they look identical. They are just like this, except they're a little smaller. And from a standpoint of a real work of art, a beautiful bar with a serial number and a certificate of authenticity with it, they're the nicest 10-ounce bars I've ever seen. Those are $5.50 per ounce over the price of silver. And look, they're a little bit on the higher side for a 10-ounce bar, but well worth it. I think they are absolutely amazing. And remember, when you're paying a little bit of a higher premium in comparison to something else, like a generic 10-ounce bar, you will get that back when you sell it. And especially if we see heightened demand, which ultimately we will, and high premiums, they are the class of the silver bar industry. So $5.50 on those, $129 per ounce on the gold. And we got plenty of the silver. We got 500 plus of the $20 gold pieces left and a few hundred of the 10-ounce gold pieces left. They've been selling pretty quick, but we'll hold the rest of them for your listeners through the end of this week until they're gone.
Well, Andy, our listeners really appreciate that. I remember everyone, the $10, the first tranche of those that Andy got about 3.5 weeks ago were gone by lunchtime the next day. So don't hesitate. If you're considering getting the $10 Liberties in particular, don't hesitate.
Yeah, and then one last thing. I'm sorry, I know you like to keep this quick, but the reason the $10 Liberties maybe are more preferred is because think of how much money $20 really was in 1900. And, it was worth a few thousand in purchasing power. So $10 would have been used much more frequently, and therefore we don't see them as often. So they are a treat. I promise you, you'll love them. They're amazing.
Well, let me get your logic there. Because they were smaller, they were more affordable because that was a lot of money back then. Therefore, they tended to get used more. Therefore, they got worn out more. And if these are XF grade, that makes it more of a rarity that we have them in extra fine grade in the smaller sizes.
Correct. And the $5 would have been used more than the 10, and the 2.5 more than the 5, and the $1 gold coin, which is the size of a button on your shirt, would have been used more than them all because money really meant something back then when it was as good as gold. So anyways, they're cool, and I really love them, and I think everyone will too. And remember, we have satisfaction guaranteed on delivery. If someone receives something, this just doesn't look right to me, let us know. We'll gladly replace it for free at our expense, and that doesn't happen very often at all. But if someone receives something in their mind it's not up to par, we'll make it right. But these, I think, that won't be an issue. They're pretty darn special.
Yeah, we've had high accolades from the clients who purchased them over on the last batch that you had last month. So Andy Schectman, CEO of Miles Franklin Precious Metals, thanks for joining us again here on Liberty and Finance for this weekly market update.
Always great to be with you, Dunnigan. I look forward to seeing you next Tuesday. And happy 4th of July, belated to everyone out there. I hope everyone's doing well and has a great rest of your summer. And look forward to catching up with you next week, Dunnigan.
Awesome. This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.